Thank you very much. Um, I'm representing here a non-for-profit Italian organization that works for promoting microfinance in Italy. It has already done it in developing countries, but it has decided to focus in Italy now. It might sound strange to maybe most of you, and some maybe are wondering, why are we talking about microfinance within this forum? Because actually, microfinance doesn't finance the real estate market. It doesn't have direct linkages to the real estate market, but it doesn't in Italy, but it does in some other countries. But anyway, what we thought it would have been interesting here would have been to explore new ways of financing, because even in social housing, as we were seeing, after the international financial market crisis, we need to reshape the ways of financing. And in this respect, microfinance provide a new ways of interpersonal relation between the financial providers, the financial institutions, and the customers, the clients. So this will be an overall presentation on microfinance. I'll just give a brief, from microfinance point of view, the point of view on financial market crisis. Then we'll see what microfinance is and how it works in developing and developed countries. What can be commonalities between microfinance and subprime lending? I'm not specialized on real estate and subprime lending, but I just try to sort out to find some commonalities between the two. Then seeing the role in developed countries, in Italy, and just a brief explanation of the experience of the association I'm representing here. So this is very obvious. What was one of the causes of the financial market crisis? It was the greater emphasis put on the value of the asset owned by the client, maybe the land owned or the household by the client, rather than her real capacity to repay the loan. This was one of the causes inter alia. It was not the main one probably, but it was one of the causes. One of the consequences we envisage is the declining of the trust that savers has towards the financial institution now. At least in this country, even if in Italy banks haven't had the same problems that banks had in other European countries and in the United States, but we also had in the recent years other financial crises, and trust towards the financial institution is really declining. So there is the need to find new ways for reshaping the interpersonal relation between financial services providers and customers and final customers. And in this respect, microfinance can provide a new way of creating this interpersonal relation. Now, what is microfinance? I don't know, maybe some of you never heard about microfinance. Microfinance is based on, it's a development tool in developing countries. It was consecrated to the public attention by Mr. Yunus, who was awarded with the Peace Nobel Prize in 2006. It's based on very small amount loans given to the poorest of the poor. What changes compared to the traditional finance is that microfinance don't ask for real collateral guarantees, but for it trusts on the personal capacity of the loanee to repay the loan. And in fact, in the last 30 years, microfinance has shown that the poorest can pay. Repayment rates are very high for microfinance institutions. The most famous example is that of the Grameen Bank in Bangladesh, where we have a repayment rate of 98%, something like this. Now, microfinance is developing also in industrialized Western developed countries. It has already spread in the United States, in France, in Germany, in Spain, and in the United Kingdom. The European Union parameters for microfinance is considers loans below 25,000 euros for enterprises of less than 10 people. But it's just let's say a general parameters. Then we can have different kind of supply of microfinance for each country. As I was saying, what changes is the guarantee scheme. People are never asked to provide some assets or some collateral as a guarantee. But the institution that works for providing this kind of services try to create a strong interpersonal relation with the client, to know him as best as he can, and to base the trust that he puts on the clients on his capacity to repay based on his social networks. For example, the organization I'm representing here, Microprogress, asks each client to have a network of people representing him, saying he's able to repay. We guarantee for him that he will repay without any collateral aspects. Microfinance has two functions. One is productive, because microfinance is not really for emergency loans or consumption loans, but it's mainly for productive loans, so for launching new income-generating activities and enterprises, micro-enterprises. The other function of microfinance is accompanying the clients, is following up right after the disbursement of the loan and for all the repayment cycle. That is very costly. Interest rates, as we will see, are quite high in microfinance. But as I was saying, the specific feature for microfinance is the care to customer. The principle of know your customer is very highlighted for microfinance institutions. Now, this is what I tried to find as commonalities between microfinance and subprime lending. Let's say microfinance loans do not rely on collateral, as I was saying, on the value of underlying collateral, but as microfinance is an nascent high-growth industry, it has commonalities with the early stages of the subprime lending industry, but with notably differences that keep it safe from risk that led to the real estate bubble. Some of them, one is the expansion of financial services to the underserved, to provide business opportunity for investors and access to funding for clients. Another one is influx of available funding to the markets to enable rapid growth of business. This is one problem for microfinance institutions in Italy, because some of them are private companies. Most of them are non-for-profit organizations as mine, so we need available funds from the governments, and it creates some problems for us because the governments doesn't really look at the microfinance market as let's say, an important one. Then the prevalence of high interest rates, as I was saying, to offset the increased risk in subprime markets, from what concerns the subprime markets, and to cover high operating expenses in microfinance markets. No, sorry. Another one is the appearance of innovative new products to facilitate market penetration. In particular, microfinance always try to design loan products and services that are really fit to the need of the clients, in order to enable the clients to repay in the best way. And then the increased reliance on technology to facilitate rapid growth while distancing borrowers from lenders. Now, what distinguishes microfinance and enables it to be sustainable, as I was saying, one is the in-depth examination of delinquent loans. Products are designed, as I was saying, to fit the needs of the clients, and it's very important to understand what doesn't make the client repay in case he is a defaulter. Loan products fit to the needs of the borrower, and then, for sure, the strong commitment that this kind of organization, as I was saying, mostly non-for-profit organization, to the mission of supporting poor and financially excluded people, the so-called non-bankable people. In this country, most of non-bankable people are, for loans, for productive loans, are women and migrants and young people too. What is the potential of microfinance for growth in developed countries? I took the case of ADI, which is the biggest microfinance service provider in France. In 2007, it served 18,000 active clients, and it had 10,000 loans delivered. Now, they calculated this interesting comparison between the cost for creating a microenterprise and the cost, what it costs to France, to the French government, to the state of France. What is the cost for a single unemployed? Now, the cost for creating a microenterprise is 2,000 euros, including cost, operating and financial cost for launching it. As I was saying, a microenterprise is considered an enterprise of no more than 10 people. The average cost for an unemployed for France is 20,000 euros, so this means that, at least in France, it has also a welfare role. Microfinance also has a welfare role. What's the situation in Italy? Now, according to the ISTAT research of 2008, the Institute for Statistics of Italy, families in relative poverty conditions are 7 million people, about 11.1%. Financial excluded people are similar to this. It's 11%. It means 2.5 million households in Italy. There is a relevant presence of migrants in this country, as you know. Regular migrants are about 350,000, and more of half of them are entrepreneurs, according to the dossier of Caritas Migrantes, but only 23% of them has access to credit. And according to a research made by Microfinanza SRL, which is the most important rating and consulting firm for microfinance in Italy, the potential market for microfinance in Italy amounts to 5 billion euros. But currently, microfinance in Italy covers less than 1%, 50 million euros. So there is a twofold challenge for microfinance in Italy. One is renewing the existing financial tools designed to fit the needs of the borrower, and the other one is reducing welfare costs. Very briefly, the experience of microprogress, as I was saying, I just showed you the lending process. It is designed to minimize the credit risk due principally to the asymmetrical information. We have the 6 C's of the loan analysis that are quite the same for financial institutions, actually, but they really take into consideration the customer potential to repay. So we first have a screening with the client, a first one, a telephone screening. Then we help them to develop the business plan through a project analysis. We make our internal evaluation, and then we send it to Torino, where there is a private microfinance firm that makes the final evaluation, and that provides the money, disburse the loan, because we, as a non-profit organization, we cannot disburse money. For what concerns the collateral, we mainly use the social network guarantee scheme, as I was saying. When it doesn't exist, we adopt the more traditional banking scheme. Social network guarantee scheme means that, as I was saying, we ask the potential client to put us in contact with a group, a pool of people that knows him, maybe an association, an organization, a cooperative, the migrant community, a church, whatever, that guarantee for his liability and his capacity to repay. The monitoring is very important, and the follow-up. In order to prevent defaults, each month before the repayment day, we have a phone talk with the client, and each quarter we visit the clients and their guarantors and the enterprise too. Thank you.